Hello everybody, welcome back to the channel, and without further ado, let's jump right into it. This is going to be the continuation of all the events that have been going on over the last couple of days, as a lot is happening and we have once again a lot to cover. In response to the depeg, it says extraordinary depegging. It's not extraordinary because these things are all based on nonsense. Event of the USD stablecoin caused by the collapse of its counterparty Silicon Valley Bank. Crypto whales have reported severe losses and appear to have embarked on a series of capital flights to protect assets. For those of you who were not paying attention to the markets over the course of the weekend, that is a couple of days ago, when the markets got news that there was an issue with Silvergate Bank and then also Silicon Valley Bank, and we figured out that there were a number of cryptocurrency companies who also had exposure to these banks. As I told you before, this is how financial situations work. Like, you don't just work with a bank, you typically work with multiple banks. You would not normally, in any given real scenario, have $5 billion in just one bank sitting there. You would have it in hundreds of different operations and at least 4 to 5 to 6 to 7 to maybe 10 different banks in the event that there is a bank that ends up going down, as we see now that it is definitely a possibility. However, during the events of the collapse of Silicon Valley Bank, a lot of people realized that a number of stablecoin companies, Coinbase with their USDC coin, basically had exposure to them, and then the coin actually ended up depegging. And then when that coin ended up depegging, a number of stable coins also did the exact same thing, which then led to a dramatic unfolding of events where people were taking their money out of stable coins and pushing them into Bitcoin and Ethereum as a safer haven. As the stable coin began to collapse, someone posted, or rather the co-founder of Huobi posted, and I quote, "I dodged Luna, dodged Three Arrows Capital, even dodged FTX and their collapse, but I couldn't avoid Silvergate, nor Silicon Valley Bank and the US dollar coin. Asked a few crypto veterans, losses amounted to $1 billion in stock and deposits, myself included. I'm very upset and it's time to cut down on my budget." Oh, how sad. You have to cut down on your budget from being a billionaire, Life is really hard for you. So this will keep happening over and over. I'm going to continue reiterating that until everyone really just understands exactly what I'm talking about. Everything, for some reason, is heavily intertwined with everything else, and this should not be how things are. And if this continues to happen, when one institution falls, we are going to see the collapse of another. That's like saying, this is not happening now, but this is, Imagine Cardano drops by 25%. Imagine Tron completely collapses and everyone goes, oh my gosh, I need to withdraw my Bitcoin because Tron has fallen. That's what it sounds like. That's how stupid that it is. But anyway, so on that first note, and then in continuation of these actual events, a number of stable coins have actually begun to repeg. Some of them are at 98 cents, some are at 99 cents. After the news that we received yesterday that the U.S. government, Federal Reserve, would be providing billions of dollars to make sure that everyone who had their money in Silicon Valley Bank will be able to still withdraw their money. How do I'm trying to phrase it, the words not correctly, but in an okay way. It's so stupid that off of the news that the Federal Reserve and the U.S. government is going to create or print or give enough money to this bank to be able to get not even back on their feet. There's a whole bunch of other stories that we also have to cover. That a stable coin would also then repeg itself as opposed to having just not depegged in the first place. So anyway, on that news that the U.S. government is coming to the rescue, stable coins have begun to repeg. When they're like at $1 for a couple of weeks, the news will of course dissipate and no one will be talking about this anymore. But this is now the second or third instance in a year's time within the last 12 months that we are hearing that digital coins that are meant to mimic the US dollar have depegged or have lost their dollar peg. So the literal things that are mimicking the old financial system also keeps collapsing as the financial system continues to collapse, which also then leads to the question, why do we have stable coins except for trading in the actual markets? That's the stablecoin Coinbase coin news. Was down. Many coins depegged, many different stable coins depegged, but I think this is the second largest one or something like that. And the Binance coin didn't go down as much as this one did. And therefore, this is why this one made it into the news. Moving along. Also in completely logical, because this is how finance works, crypto company Ripple apparently announced that they have some exposure to Silicon Valley Bank, but nonetheless remain in a strong financial position. This was said by Brad Garlinghouse in a tweet. Over the weekend, I think people like to be scared. I think people like drama. I think it's simply another after effect of social media. People want something terrible or weird or strange or dramatic to happen so that they can stand there with their phones and record it as opposed to doing anything else. So they want something to happen online so that they can be the first to retweet it or tell other people about it. It's the whole social media world that we live in now. People were freaking out over the weekend that Ripple might have had exposure to Silicon Valley Bank. The idea was, if you have exposure to Silicon Valley Bank, what about XRP? What happens to the coin? Everything is going terrible. Woe is us. And I held my tongue, or held my tweets back, because of course they did. Because every other company in the cryptocurrency space had the same exact exposure as well. Many of these companies are located in Florida, in California. A lot of them are in Silicon Valley. They hang out with other billionaires who run these companies and these organizations. And as a multi-billion-dollar company with cash on hand, you don't have all that cash in one bank. You work with companies and banks in this instance who are friendly to cryptocurrency companies. There are not many banks who openly want to work with us. This is why we had the news 2 weeks ago. Many different banks were closing the accounts. Remember the news that we had from the 2 UK banks who announced that they're no longer helping anybody in the cryptocurrency space. There was also a bank in America who announced you have to move over $100,000 at a time for them to want to even think about working with you in the cryptocurrency space. Remember, it was quite dramatic. So how do you mitigate, and I air quote here, mitigate the risks? You work with multiple companies. You invest in multiple banks. It's just completely logical. However, on the news that Ripple came forward and they were like, yeah, we have some exposure to the bank because every other crypto company does as well, the price of XRP fell. Why would the price of XRP fall? Because people don't understand basic economics or how any of this actually works. They simply just look at their coins. They're hoping to become millionaires, and that's usually as far as they end up getting. When I tell you to do your own research, it's this. It's all of this. Like even anything you hear, anything from forever, anything you hear me say in a video, if it sounds weird to you, always double check it, triple check it. Make sure that TMI is not going insane. Or if something intrigues you, don't let it just intrigue you. Dig deeper, learn more about it. Learn why we have Bitcoin, why we've been trying to get away from the traditional financial system, but it still has us deep in its clutches. It's because everything is connected to everything else. Ripple, currently engaged in a lawsuit with the SEC that's irrelevant to this actual news, stored some of its cash reserves at the now failed tech leader, Garlinghouse said. He declined to quantify the amount stuck in limbo. It's no longer stuck in limbo, as we now have news that apparently, according to the Fed and the U.S. government, all depositors, people who have money with the bank, will be able to receive their money that they had from inside the bank. Ripple is the latest company to comment on its connections to Silicon Valley Bank, which failed Friday after a run on deposits forced regulators to put the FDIC in control of its remaining assets. Amid fear that large depositors may not be made whole, federal regulators are said to be considering measures that would seek to prevent the second largest bank failure in the U.S. from kicking off a broader crisis. They have no choice. They literally have no choice. Everything will begin to cascade and we will be back where we were. How long was that? Was that 14, 15 years ago? That sounds insane to even think of that it was that long ago. So as you might have imagined, in always dramatic news, this was by far one of the most infamously popular news stories that's floating around out there. Silicon Valley Bank crash does not impact Ripple. This was said by Garlinghouse. Ripple has exposure to Silicon Valley Bank. This was said by the CEO. Garlinghouse, some of Ripple's cash is at Silicon Valley Bank, but it remains firm in a strong financial position. I'm sure this didn't affect them at all, except for people panicking and selling off XRP because people are being told to constantly panic. I've been telling you this for years. Pay attention to who tells you to panic. Pay attention when they make YouTube videos and their YouTube video has no information except for telling you guys this looks bad. Stuff is about to crash. Stuff is about to fall. But they give there's no explanation as to why. They simply want you to be afraid. And you have no idea. Like there's so much money floating around in the space. We're not supposed to be in this market. I've told you all that before. This is a market now for hyper rich millionaires and billionaires, and they want all of us out because they want the coins for themselves. So that when this is the only financial system, we then, strive and struggle to try and get as much crypto as we possibly can after prices have gone up. These things are not coincidences. They keep happening over and over and over. Anyway, that's the Ripple had cash with Silicon Valley Bank. I mean, I'm shocked. Aren't you shocked that a multi-billion-dollar company would be working with other different banks around the United States? I mean, I've never heard of anything like that before. All right. Let's move on. What? This is crazy. How could this possibly happen? Crypto exchange Coinbase, crypto lender Celsius, and stablecoin issuer Paxos are among the crypto firms with funds reportedly tied up in the now shuttered Signature Bank. The crypto-friendly Signature Bank was shut down by New York regulators on the 12th of March in conjunction with the U.S. Federal Deposit Insurance Corporation, or the FDIC, to protect the U.S. economy, sure, as they claimed the bank posed a systemic risk. Crypto exchange Coinbase tweeted on the 12th of March that it had around $240 million in corporate funds at Signature Bank that it expected would be fully recovered. Here's the tweet for it right here. Amazing. Wonderful. Stablecoin issuer and crypto firm Paxos also came forward, tweeting it had $250 million held at the bank, but added it held private insurance that covers the amount not covered by the FDIC, which is only up to $250,000 per depositor. Here's the tweet for it as well. The Celsius Official Committee of Unsecured Creditors, a body that represents the interests of account holders at the bankrupt crypto lender Celsius, added that Signature Bank held some of its funds but did not disclose the amount. I'm pretty sure you get at this point that all these companies are doing the exact same thing. Remember when listen. What have I been saying for the last, it's been 5 months? FTX, say it with me, was not the only company that exactly. They all do the exact same thing. This is going to get you so far. This is not a joke. This will get you so far financially and in the cryptocurrency space if you come to realize when you're able to actually call BS on something. Excuse my French. Every single one of these companies keeps on pretending that when something happens, they go, oh, this is an absolute tragedy. I can't believe this. But the moment they're actually affected by this, because they always are, then they go, yeah. We had some little, it was only $250 million, but things are fine. It's okay, because they're all doing the exact same thing. What happened to proof of reserves? What happened to people's money? What happened when all these stable coins, these DeFi platforms, and these other cryptocurrency companies collapsed last year? And we heard that they were all working with each other. And this happened multiple times by summertime. And by the time we got to October, November, and the whole FTX Sam Bankman-Fried thing happened, and they were like, yeah, I can't believe we worked with Sam Bankman-Fried. Really? You all knew what was going on. It's just that when the public finds out what's been going on, That's when everyone comes forward and goes, I'm sorry. We didn't mean to. Yeah, I know we've been working with them, but we will never do this again. When these companies take their $250 million, where do you think it's going to go? It's not going to sit on someone's lap in Coinbase. It's going to go to another bank, or probably two banks, who were also doing the exact same thing as the other banks that collapsed. Do you think it was weird or random that the other banks collapsed in 2008, 2009, and now we're seeing the exact same things? Or that other banks around the world have been collapsing for years? You've noticed less bank branches around where you live, right? Everyone's been paying attention. That's the Coinbase, Paxos, and what was the other one? Celsius. All had exposure to Signature Bank. I mean, I can't believe it. That's crazy. Why would that keep happening over and over and over? And we're constantly told to keep trusting these companies, to keep trusting these banks. No, it's fine. It's okay. It's okay. What happened now will never happen again for the next 4 months. Something else ends up happening. Everyone figures out that everyone else had exposure to everything else. Prices begin to fall. People begin to panic. We have a system that no longer needs to rely at all on the old ways that things were done. How long until people figure this out and switch over to the new system? That's the Coinbase, Celsius, and Paxos all had $250 million at least tied up with Signature Bank news. I mean, I'm shocked. Okay. Let's move on. In working backwards to move forward news, global clearing institution, the Bank of London, apparently submitted a formal proposal to acquire the Silicon Valley Bank subsidiary in the UK. I think it's just called SVB UK, according to a statement disclosed by Reuters. As per the statement, the purchase is an effort to form a consortium of private equity firms. They said a consortium of leading private equity firms led by the Bank of London confirms it has submitted formal proposals to His Majesty's Treasury, the Prudential Regulation Authority at the Bank of England, and the board of Silicon Valley Bank UK. Apparently, it was SoftBank-owned Oak North Bank, Abu Dhabi Investment Vehicle, ADQ, and another arm of something were also invested in the actual, and interested in investing in the actual purchase of it. And then the news happened. Apparently, no one else got it except for one bank. Global banking giant HSBC. It says it's coming to the rescue, but that's nonsense. Banks don't care about us. They're doing it to give themselves extra money. Global banking giant HSBC, the UK branch, apparently is acquiring Silicon Valley Bank UK. HSBC officially confirmed or announced on the 13th of March that its subsidiary HSBC UK Bank is acquiring SVB UK. And the news is, why this made such headlines, is allegedly they're acquiring it for £1. That is to say, one Great British pound. It says $1.21. That's not what's actually happening, but that's the more clickbait-worthy news. As of the 10th of March 2023, SVB UK had loans of around £5.5 billion and deposits of around £6.7 billion, HSBC said in the announcement. For the almost said fiscal and financial, fiscal. For the financial year ending last year, SVB UK recorded a profit before tax of £88 million and so and so and so. They said final calculations of the gain arising from the acquisition will be provided in due course, yada yada. The company added that the acquisition would be funded from the existing resources and would be completed immediately. Long story short, without having to read through any more of it, they basically are covering the debts by the company, and therefore the money that they're making from it make it seem as if it's only being purchased for £1. It's like a cheeky way of saying it, but as you might have imagined, this was super popular news. HSBC acquires Silicon Valley Bank UK for £1. HSBC subsidiary to acquire Silicon Valley Bank UK unit for £1. So the world has been saved once again by the people who tried to destroy it. All the news that we're going to be getting over the course of the next couple of, I give it 3 weeks, 3 weeks maximum. It depends on how dramatic they're trying to be with the news. Whenever we get news that something has been saved or is, no longer an issue, we'll hear about it for about a week. But I think they want to push home quite firmly that this was a big event. The Fed and other banks around the world are making sure that it's not a problem for people to be able to continue to take out their money from these banks. And then in about 3 weeks, something else big will happen, and then we'll never hear about any of this ever again. That's always how it works. Always. You can, quote me on that. I give it 3 weeks. It's always the exact same. Something else will happen. We'll stop hearing about this. And yeah. So as it stands right now, it looks as if, once again, I'm not in the future, so I can't really tell you. It looks like a lot of this will be mitigated and or completely no longer talked about once the actual funds begin to move around and Silicon Valley Bank has been acquired by HSBC, and also when the American branch has received money from the Fed. So everyone panicked for 4 days, and this is where we currently are. That's the HSBC is apparently acquiring SVB UK news. Moving along. Also, if you didn't catch it in one of the other news stories, New York-based Signature Bank, which has a number of crypto clients, was shut down on Sunday by state regulators, the Federal Reserve announced. In a statement, New York Department of Financial Services Superintendent Adrienne Harris said the Federal Depository Insurance Corporation, or FDIC, has taken receivership fancy of the bank. This marks the third bank collapse in under a week, following Silvergate Bank's voluntary liquidation and Silicon Valley Bank shutdown on Wednesday and Friday, respectively. Harris said the action was to protect depositors. No. They knew exactly what was going on. People have been freaking out over all of this. So this was basically the absolute minimum of what they could have done. A joint statement from the Federal Reserve, FDIC, and U.S. Treasury Department said all depositors who use Signature would be made whole in a joint statement outlining actions the federal regulators would be doing to protect depositors in the Silicon Valley Bank. So but previously we had news before that Silicon Valley Bank people who had money with the bank depositors would be safe, or they'd be able to get their money out. And now we apparently have this for Signature Bank as well. They said Signature Bank is a New York State chartered commercial bank and is FDIC insured with total assets of approximately $110 billion and total deposits of approximately $88.59 billion as of the end of last year. Is this also the same thing? Yep, also the same. Breaking, crypto-friendly Signature Bank closed by New York authorities. Breaking, Signature Bank closed by New York banking authorities. Cool. Amazing. So they didn't really have a choice but to kind of close it and or have someone acquire it almost immediately. Something else is going on. Something else is wrong. That's not tinfoil hat. It's more of a, I feel like this isn't the end of the story. These collapses don't happen randomly. There's always something that's been building up for a number of months. Things end up collapsing, and this is kind of what we get. So as of now, I mean, the banking world is in relative shambles, and we're waiting for information about the interest rate and what else is going on. And inflation is still going on, and there's just a lot that's always happening in this world. So at least now we can all rest assured that the people at the very top have our best interests in mind, right? Right? That's the Signature Bank closed by New York bank authorities news. That's a really weird photo. It's like people looking at the sorry we're closed sign, but they look like they're trying to translate it because they're looking way too hard. Anyway, let's move on. Also in the news, it says computer entrepreneur. That's weird. CEO of the digital currency group Circle, Jeremy Allaire, shared a Twitter thread in the early hours of 13th of March updating the current status of the company's Circle coin reserves and Silicon Valley Bank deposits. He claimed that the whole deposits at the bank are safe and would be available for banking the next day, referencing the debacle of the collapse of Silicon Valley Bank. So everyone had exposure to Signature. Everyone had exposure to Silicon Valley Bank. It appears that people will still be able to get all their money out or do something, or the peg is back and the future looks bright because the rich people have once again destroyed and then saved the day. It says, will Circle be able to restore stability to the US dollar coin after Signature's bank failure? Probably. Probably. Why not at this point? Also floating around in the news. Also in another portion. Wait, is this it? Oh, yeah. Here's a big one. Despite the recent crackdown by the US SEC on staking services offered by centralized providers, Coinbase has reiterated to customers that its staking services will continue and may actually increase. Whoa! In a new email highlighted by a popular trader via Twitter on the 10th of March, Coinbase outlined their updated staking terms and conditions starting from the 29th of March. It says, new email from Coinbase. It says your staked assets will continue earning rewards. No action is required. You will earn rewards from the protocol, not Coinbase. Coinbase telling the SEC to take a hike. This is the tweet for it. So one, I assume that in the last 3 weeks, Coinbase has probably had a literal multitude of meetings with members from the SEC that we simply were not present for. I do not think Coinbase would ever tell the SEC to go take a hike because Coinbase would be shut down. There would be a massive smear campaign for 5.5 days, and you would be told to take all of your money out of Coinbase. Everyone in agreement? Right. So I assume them writing all of these things, you will earn rewards from the protocol, not Coinbase, is the problem that the SEC had. For those of you who missed it a couple of weeks ago, the US SEC announced that they believe that Coinbase offering staking to people is the security. They're offering a product or a service that people are using in conjunction with Coinbase in an effort to make a profit, not realizing, and I assume the SEC is just special at this point, that people are giving it, or rather it sits on Coinbase and then Coinbase actually moves that into the, like you have to move it into the actual protocol. The SEC said that they weren't sure if Coinbase was simply leaving your money on your homepage and they were making money behind the scenes that then gave you money, or if you understand what I'm saying? So the issue is that the SEC didn't know if people's coins were being staked. Were you giving it to Coinbase? They picked it up and then threw it into a protocol, and then when you got money from it, they threw it back at you. That's not a security. But the SEC said or believed that Coinbase was simply, or accused them of, basically taking customers' money and then kind of throwing money back at them without you knowing if your coins were actually being staked or not. So I assume this has been clarified to the SEC, which is just full of people who have nothing better to do with their time instead of just like harassing millions of people around the world over and over. So the news is Coinbase staking is still there. It's going to continue. There's some type of new terms and conditions if you're using Coinbase that you're probably going to have to click yes to before the 29th of March or after the 29th of March to say that you agree and or comply with what they are doing. So cool. Wonderful. I'm not that I'm happy to hear it, but a lot of people don't like to self-custody. So they do use places like Coinbase. So I'm all about the passive income, especially when it comes to cryptocurrency. So look forward to new coins that they're going to be adding and or announcing. And I assume they're going to have a very detailed, we are using your coins to put into a protocol. But also never forget, you yourself are able to, don't ever forget this, you are able to self-custody. And there are self-custody wallets where you can stake on there for free as well. There's no fee to you. There's no Coinbase fee that you have to pay. I think that's very important to reiterate because a lot of people assume that they have to use a larger company to be able to make money. Nope. This is why we have crypto, because the protocol does it. The protocol is the answer. All right. Let's move on. As always, a very special thank you to my Patreon supporters: American Crypto Academy, Martin Stoyer, Bodie McBoatface, Sam Ratter, Dotha Diddy, Manny Cryptos, Crypto Gambino, Auspicious Agile and Blockchain, Jamie Saad, and let's move on, Empire Queen, Roman Geba, Bitcoin Ben Arachno, Dave the Dealers in, Captain Something in the Z-Way, Lay, Mo Barazi, VB Nerd 21, Lauren De Silva, Quoted Biddy, Troy Allgood, Space Case, Need a Miracle, Pattern, Noster, Navarro Williams, Utopia 569, Moonman, High X, Arpinos, Roma, John Sarsin, the Anna Marita, Bibliophobia, Adam Grace, Wise 9, Owl, 242 to the World, Bankroll Network, Crypto Artist, Cold D3D, Setsuna, Paxis, Jim Gardner, Jeremy Fox, minting coins. Geez, the Bitcoin line is very long. Oh, it all just disappeared. Did you all see that? Oh, now it's back. What? That's crazy. Minting coins. Yes to crypto. Anytime Fitness. Monk's Corner staff. Bake me a cake. Tigger, Macho Nisa. And on crypto with Lionel. Thank you all very, very much for your continued support. Thank you to everyone who left a like, comment, has subscribed, or supports in their own way. I do thank every single one of you. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.